All right, so a lot of y'all enjoyed that last lesson from yesterday. I know with some of you guys reaching out to me and stuff like that, I really hit a nerve with some of you, and all of these concepts seem to be resonating. So that is the goal, guys. The goal is for you to learn from my mistakes. The goal is for us to develop these good habits early. And the goal is, if you're already down the path of bad habits, this is meant to kind of give you a wake-up call, shatter a lot of the false beliefs, false things you've been chasing, so we can really hone in and focus and actually make this happen. Because a lot of us tend to get in this trap where we are not actually making progress, where we're simply running in place. And we never want that, so I'm glad that this boot camp has served as that wake-up call for some of you guys. Without further ado, yesterday was psychology, so we won't talk too much about psychology in this lesson. For this lesson, we're going to be talking about discount, premium, as well as OTE. And we are going to be spending the majority of this lesson on the charts. But before we do that, we do have to cover a few important topics. So, discount, premium, OTE, you may have heard these terms. What exactly is discount and what exactly is premium? Well, we're looking at this price leg here. Price has made a displacement down, and in between this high, in between this low, the 50% point is the equilibrium of that range, of that price leg. So whether price has made a bullish expansion and we made a, price leg that looks like this, boom, or if price made a bearish expansion like this, or if price is just in between a range, the 50% point of that range is always going to be the equilibrium. Now, depending on what context we're framing our entry is going to depend whether or not we want to see a premium or see a discount. And what is premium? Premium is simply above that 50% point. So above the equilibrium is premium, and below the equilibrium is discount. And the highest probability sells come from premium areas. So up here in a premium, the highest probability buys come from down here at a discount, right? It's just like buying something at the store. It's just like buying something in, the real estate market or the car market or whatever market it is. You always want to be buying at a discount and selling at a premium. That is always your best case scenario, no matter what business you're in. So with that being understood, we know that the highest probability sells are going to come up here in a premium, highest probability buys down at a discount. How can we begin to refine this zone? Because to be honest, this is usually quite a big zone, and there might be 2 or 3 or 4 different levels in here that you're potentially considering to take a trade. So how do you figure out which one is the highest probability one? Well, this is not always the case, but typically the highest probability retracement level, the one that's going to give you the quickest responses most consistently, most of the time, is optimal trade entry. And that's between 0.62 and 0.79, the golden zone being 0.705. And we're going to show you how to set your levels like this on the Fibonacci as soon as we jump into the charts. And we're about to go ahead and do that right now. So let's go ahead here and pull up the chart. Right here we got NQ, and you can see that we've got these 2 equilibriums pulled up already. So as a default, if you're clicking this Fibonacci tool up here, if you expand this, it says Fib retracement. If you select that, by default, it's probably going to give you a whole bunch of crazy levels. Now, there's only a few levels that we need. So what I would do if I were you is I'd set one like this. So set it up where it's only 0, 1, and 0.5. Those are the only 3 points you need. Make it all the same color and choose a color that's not going to be too distracting. And then after you do that, make sure you click it, come over here, and then you want to save that as a template. I already have mine saved as equilibrium, but you could save it as a template. And then what happens is every time, say I use this one, every time you click that, it just goes back to the template. And then you could save a template for this other setting as well. Now, let's make one for our OTE. So we're going to double click that and just make sure you have all these levels marked off. And you can take a screenshot if you want to. Just make sure you copy this exactly. And then what that's going to do is if you draw it out bearish, it's going to give you that OTE bearish. If you draw it out bullish, it's going to give you that OTE bullish as well. So let's go ahead and apply this. So how do we actually apply this to price? Well, let's hone in on our session window. So we know that we start trading at what time? 9:30 a.m., guys. So 9:30 a.m. Actually, we've been using these days over the last couple examples. Let's pick some new random price, just so you guys know I'm not out here bullshitting and just giving you the same example every time. What is this right here, guys? A displacement leg. And then we even have a bigger time frame displacement leg because price had been trending all day. So as of now, I would probably mark this out either like this from down here, or I'd be using the most recent leg from like 8 to 8:30 in between that window. And you could see already price has a fair value gap in the golden zone, guys, in the golden zone. So that's probably a high probability fair value gap then, right? If it's in the golden zone, it should play right out. And it gets traded straight through. So, guys, just know that this is not always going to be the case. There are lower time frame confirmations and other factors that you will have to consider. But let's go ahead and see if we can find more context using these same tools. So if we jump up to a 4-hour chart, guys, what do we notice? We notice that we're actually in a premium. So although from a 15-minute perspective, we were at a discount, from a higher time frame perspective, we're at a premium. And as we know, a premium is not the best place to buy, guys. So everything above this level is a lower probability buy than below that level. And we're going to drop down to these time frames, and it's going to blow your mind, guys. If you thought that that first example didn't include these concepts because that 15-minute failed, just wait till you see what happens after this. Look at that, guys. What would that be right there? Is that 4-hour OTE? From a bearish standpoint? Interesting. So you're telling me that the New York session doesn't have to deliver based on what the 15-minute showing you, even with OTE. And I know some of you guys, if you use my top and bottom ticking model, if you've had good success with it, like most of you had, that's good. But many of you are starting to realize that there's a little bit more nuance to it than just the 15-minute fair value gap and order block. So if you've lost maybe 1 or 2 trades using that model and you didn't know why, this may have been why, guys. And it's all about developing these layers of context. So in this example, even though you may have entered that day thinking, because we have a 15-minute bullish leg, we should continue up, what you failed to understand is right before session open, we actually touched a 4-hour OTE. We were also in a 4-hour bearish fair value gap. And we're starting to get into higher time frame to lower time frame and just multi-time frame analysis in general. Now, we won't dive too deep into that right now. I just thought that was a very good impromptu opportunity to show you guys how, you could use all these tools on every single time frame. And the more higher time frame influence you transpose to the lower time frames in the intraday, the clearer of a picture you're actually going to get. So let's go ahead and go over a few more examples here. All right, so let's go to this day right here. You can see in this case, we actually had some consolidation going into our session here. But if we go ahead and mark out our time-based liquidity here between maybe, let's see, 2 a.m. and 5 a.m., 2 a.m. was up here, London high and London low. So you can see we had London high up here, London low down there. If we take the OTE of that range, what do we have? We have the start of our golden zone right there. So we already ended up tapping it right here. So in this case, that golden zone has already been touched. It'll be interesting to see if it comes up here, but we'll go ahead and wait to see what happens off open. Whenever you have a ranging market, it's a little bit tougher to find it right off open. And now look it, we're working with a little bit more data. So we did reach up for a discount. We even reached OTE right there. Ultimately ended up selling off despite some consolidation. And now what can we do? We can take this most recent swing right here and measure the OTE of this. So where would OTE on this be? Well, it would be right here at this golden zone. Do we have any PD arrays that align up with that? Yes, we do. We have a bearish order block. And let's see if this bearish order block ends up getting used. And it does. You can see price tags that order block, and it does a very nice sell-off. So if you were to top tick that level, maybe stop loss up here, or maybe you went riskier and had a 10-point stop like I do, all you needed was to take it back down to that low to get a 1 to 5. So, like I said, we're not getting too much into entries. I know a bunch of you guys have seen me take these crazy entries and you're wondering how. Don't worry about the entries yet. We're not doing that yet. This is just starting to develop the skills, the framing skills, in order to make these entries. So if you're a sniper, this is learning how to set up your scope. This is learning how to test the wind. This is learning how to sit on that roof and not pull the trigger before it's time to know exactly what you're looking for. So there is OTE. Let's find a few more examples, guys, because I really want to drive this home. Let's actually get even more granular. So not getting too much into higher time frame versus lower time frame and all of that stuff yet, but there's also ways we can apply this to our confirmations. So you can see here, price opens up, we make that displacement down, that closes at 945, then it comes back up into here and touches the order block. Now, what happens after the order block, guys? Well, we come down here again, we invert a fair value gap, we make a displacement leg, we keep running down, and then where does price reach up to again? What is this, guys? Or actually, let me go ahead and just use this one so it doesn't get too confusing. Boom. From right here all the way to down here. And what is that, guys? Is that the bottom of our OTE? Is that a premium? And is that also a bearish fair value gap that was getting respected on close, plus a high that we swept, plus we did, stop just short of an order block, but we reached for a premium, reached for OTE, boom, and then where were we headed after that? We headed down for a bit. Now, we did eventually come back up for another retracement, but eventually we did sweep that low. Let's see if we go lower, and then we finally started to reverse. But you could see two opportunities. If you missed that first opportunity, you had one here at OTE as well. Did give you a little bit of chop going through there, but ultimately ended up selling off. If you would have, tried to top tick that one on maybe the first touch or the second touch, despite a little bit of chop, if you held long enough, you would still be heading over a 1 to 5 at a 1 to 7.3. So you're seeing how this starts to relate to entries. And we haven't even talked about fair value gaps. We haven't even talked about the influence of order blocks. And we haven't even got too much into higher time frame analysis. Now, let's find one more example here because I really want to give you guys a variety of examples. Let's see if we can find a bullish example somewhere here. This looked like it was about to be a bullish example, but let's just go ahead and use this one here. It did give us enough movement to use as a bullish example. So 9:30 a.m. open was right there. And then we had a bullish price leg going into NYC open. So right here, bullish price leg. You can see OTEs right there. We have a fair value gap and we have an order block within that zone. And then if we take the whole entire run from earlier in the AM, that lines up perfectly with the golden zone. So in this case, you could have probably either used this bullish gap here, or you could have used the bullish order block down here. And in either case, if you were to just catch a small reaction off of the golden zone, maybe 10-point stop right there, boom, that was already a 1 to 4. Even though it didn't even trend up to the top right there, if you would have had your order down here, unfortunately, this time you would have missed it. And you do tend to miss it sometimes if you're below the golden zone. But you can see that was right there in that golden zone. So that is perfect. And you might be wondering, how do you tell when to use the order block or when to use the fair value gap? Well, it is due to the golden zone. Whichever one lines up better with the golden zone and gives you a better stop loss placement relative to the golden zone, that is the level that is higher probability. And over time, you'll find which level suits you best, which one is your favorite level. But just know that it has mainly to do with the OTE. So beautiful. Another example. And then just to show you that this is happening all the time, it also happens with lower time frame. So you might think, what if I miss that bottom tick entry there? Can I still do 2022 model? Can I still do, you know, other things? And yes, guys, because what do we have up here after we displaced down? We also had an OTE to the bearish side. So boom, you can see golden zone gets respected there. Where do we go after that, guys? Go lower, right? And this is a very choppy day too. So even in choppier conditions, this works. But you can see we're going down, and then you can see even here, from here to here, golden zone right there, reach for a premium. Then we go lower. So this is always happening, guys, 24/7, even right here on this small bullish reaction. See, we had this displacement from down here at the fair value gap. So maybe from like this low right here all the way up to this high, that bullish leg. Boom, OTE golden zone. Look how sensitive that level is. Boom, boom, boom. It shoots off of it 3 times. So that's the other thing too. You don't have to really be right about the final direction of price in order to capture some massive moves. You could add a 8-point stop right there at the order block. Could have targeted internal highs right there for a 2R. Could have targeted the top for a 4R. Guys, this is happening all the time on every time frame. And the more that you layer the time frames together and understand this, the better. On this day, I didn't even take into account the higher time frame price. So you'll learn much, much more about this as we start to get through multi-time frame analysis, but hopefully that was insightful for you guys. And the last thing I'll leave you with is some daily context to OTE as well as premium and discount. So you can see right here, and let's go for weekly because the weekly has been doing this pretty well lately. You can see right here, guys, that displacement right there. I know it's pretty small displacement, but you can see right there, boom. Where does it touch the most? Golden zone, guys. Look at how well it respects that 50% point too. So it's reaching for that discount. It's staying premium. That's a very bullish signature. You can see right now too. So going into this week, what would I be looking at? I'd be looking like either OTE like that, or you could take the lows, look at OTE like that. Order block down here past golden zone, breaker block in the golden zone. If we take that measurement, we have a fair value gap right in the golden zone. So that might be a highly sensitive area going into this week because it also has an order block below it to protect it. So from a higher time frame context, I know that has some importance to it. So that's how you use discount, premium, OTE, guys. We'll get much, much deeper into how that actually works with framing your entry on it, using other PD arrays to layer within it. But I really hope you enjoyed this lesson. Quick technical lesson for you guys today. So comment down below, day 10 complete, and let me know what you learned in the comments below as well. And just a reminder, I'm giving away $100 this week, so comment below, and we'll see how I feel going throughout the week, but depending on what happens throughout this week, I may just feel lucky and give away another $100 to a second one of you. So stay tuned for that. Make sure you're commenting below, and there'll be a very exciting announcement for 1 or 2 of you guys at the end of this week. Have a blessed night, and take care, everyone.